time. But Nilesh Shah, the MD and the CEO of Envision Capital, joins us now to talk more about the markets. Hi Nilesh, good morning. Good to see you in. It's been weak days for us, so we've been negotiating a fall below that 8100 level this morning. Is this still just a consolidation and correction in a bull market, or do you think now that bull market theory is being challenged?
No, I don't think the bull market hypothesis is at risk in any manner.
Okay.
We clearly believe that the next few years seem to be very good for the Indian economy, and we think that this is clearly a phase of consolidation and a bit of a correction. It's kind of markets taking a breather for the next big up move.
But will this wait have to be very long? I mean, can it take all of 2015 or even all of the financial year? As well, as we wait for earnings and macro numbers to turn, can we reach 7,000, 7,500? Time and level-wise, how bad can it get?
Well, what it looks like, I think, Lata, is that we're going to spend probably one more quarter trying to kind of, navigate ourselves, forming a bottom. It's pretty much likely that maybe from between now and October, the markets are going to remain sideways in a range. Before the whole backdrop of monsoons, rate hike is behind us.
Okay. Let me come straight away to a couple of stocks which are so seriously troubled at this point in time and check whether you will fish in troubled waters. Sun TV and Nestle. I mean, a lot of people would have wanted to own those stocks at higher levels, and these are not stocks that will fade away, I would assume. What do you assume?
Well, it looks like is that the regulatory overhang seems to have basically made these stocks look very, very vulnerable. And I think for Sun TV, the implications could be even significantly bigger. It's more a question of whether their license will get renewed at all or not. So it's a question of whether Sun TV will continue to basically be running as channels. I think in the case of Nestle, it's probably a single product issue, hopefully you can resolve it. It's all about whether it is the purity levels and things of that kind. And hopefully Nestle will be able to resolve that issue. You could obviously come up with a better product, a more refined product. Second is Nestle can keep introducing many other products. It also has many other products in its bouquet. So to that extent, I think the worry on Nestle is a lot less versus the worry on Sun TV.
Okay.
Would you buy any of them?
I probably think that Nestle on a correction should be good. I think the valuations which were trading at 50, 55 times, I think have normalized to some extent. Maybe a 10-15% correction from here, I think value will get created in Nestle. I think in Sun TV one would really wait for the event to pass away because it's anyway fallen so much. Let's assume that tomorrow the event is sorted out and the stock is up 10 or 15% also from the lows. It would still be a pretty good buy at even the 10-15% higher from here. So I'd probably wait for Sun TV, the risk to kind of pass away.
Okay. Well, by the way, the market is falling further now. So the Sensex is down more than 150 points at this point in time. And the Bank Nifty is down almost 1%. It's not even 10 minutes into trade. And we're seeing some rapid sell-offs in a lot of stocks. The biggest loser, though, continues to be Tata Motors, down 3% at this point. Nilesh, what's happening with this stock? I mean, it's corrected some 20% from its highs in less than 3-4 months. What's plaguing it, you think?
I think it's both. I still believe the domestic business is not yet sorted out. The whole pickup in CV cycle, the domestic recovery and competition making headway. So you're still seeing some relatively smaller, nimble players coming in and basically getting away the market share and accounting for bulk of basically the market share. I think the international business, which was clearly the mainstay, the key forte, again seems to be at risk because of whatever is happening with China and things of that. So I think at this stage, a combination of both the business segments is kind of at risk or is getting challenged or is vulnerable in the short to medium term. So I think these are some of the risks which are there.
So is it recommended to buy at these levels, or do you think that one has better opportunities in the auto sector?
I think one has better opportunities. Clearly, I think there's still some time away for Tata Motors to really kind of, claw back and get back its mojo, so to say, in the short term. Because even if there were to be an economic recovery, it's quite possible that some of the other players have got a strong foothold into the segment. and might probably be better proxies for an economic recovery. So one is that. Two is probably the better way to play the CV cycle is to look at some of the financials, the NBFCs, which are very specialized financiers, and who could benefit irrespective of which player gets market share. So I think it's a better way to really play that is to kind of look at specialized NBFCs who are engaged in financing CVs and other
Sundaram finance types.
Yeah, I think Sundaram, maybe even Shriram at some point of time, you know, when some of the asset quality issues are addressed, I think at some point of time, even that segment will offer more value.
Okay, we have to discuss the banks inevitably. I mean, today even HDFC is falling 1%. ICICI already, after all that fall, is a further 1% down. And IndusInd Bank is joining that list with a 2% cut. What's with the private sector banks? Is this the time to buy them?
I probably believe so. I think you've got to be, I know if 3 months back, if somebody really had issues with the valuations of private sector banks, I think to some extent the valuation abnormality or anomaly seems to be kind of correcting itself. Typically what happens is in a correction phase, the strongest and the best basically correct the last. So we've so far seen a lot of pressure on NBFCs and PSU banks. You're now beginning to see pressure on the private sector banks. So clearly I think, you know, you're clearly seeing a phase of bottoming out. And I think private sector banks are beginning to kind of now offer a little more value than what was being offered a few months back. And I think clearly when we have the bull market coming in back, again, we would assume that the private sector banks will again assume leadership within not just the banking space, but in the overall economy and overall market. So clearly, I think some of the private sector banks are beginning to look attractive now.
Okay. Actually, Axis is the